The Bank of Japan has a new governor in place. Now, whenever there's a change of leadership at a central bank, households, businesses, investors, they're going to worry. Will interest rates go up? Will those investment plans make sense? Will mortgage payments rocket? Will markets buckle? In Japan, things are much more complicated because the central bank over the past decade has spent $11 trillion buying up bonds, stocks, other assets in a bid to generate inflation. That's right, generate inflation, while other central banks all around the world are trying to get inflation down. Japan has spent the last 10 years trying to get prices to go up. Now, inflation here is currently around 3%, so still quite modest by international standards. But the important thing is that the Bank of Japan has a 2% inflation target, and inflation has been above that now for the past 12 months. And this is one of the factors that's fueling expectations that Ueda will change policy. He could call for a review of policy. That would mean change later on. He might adjust guidance for the conditions of changing policy in the future. He might scrap a cap on 10-year government bond yields. That's a key part of the BOJ's rather complex stimulus program. But it's very unlikely he's going to raise short-term interest rates without doing one of these things first, or all of them. The majority of them don't expect him to act right away. And we also know that BOJ officials are wary of making any changes so soon after recent financial sector jitters. That's according to people familiar with matter. There's also speculation of a possible early election in Japan. Prime Minister Fumio Kishida isn't going to want the guy who he's just put at the top of the Bank of Japan to then ruffle markets, bonds, currencies, everything else while he's in an election campaign.